Hello, everyone, and welcome back to our series on trading in the zone.
Yeah.
Today, we're going to be diving deep into Chapter 6, The Market's Perspective.
Oh, this is a good one.
I know, right?
This chapter really got me thinking differently when I first read it. It totally, changed how I think about risk and opportunity when I'm trading.
It really challenges, all those assumptions we bring with us,
Yeah.
that we can predict what's going to happen. We can control the market,
Exactly.
which is obviously not true.
Douglas just throws all that out the window and says, the most basic truth is that anything can happen.
Right.
He calls it the uncertainty principle. The best traders, they just believe in uncertain outcomes. They're unshakable in that belief.
It's so counterintuitive, though, because, we make trades, we go into them because we have some expectation. We do some analysis that makes us think, okay, this is going to go up or this is going to go down.
Right. And that's where a lot of us, we trip up, right? We get so focused on being right that we miss the bigger picture.
Right.
The market doesn't care about our analysis or our ego. You know what I mean?
Right.
It's driven by all these millions of different people, each with their own reasons and ideas about what's valuable,
Yeah, and it reminds me of that story that Douglas tells about the technical analyst who thinks he's got it all figured out.
Oh.
With the soybeans?
Oh, yeah. The one where he's so sure he's found this key support level.
Right.
And his mentor, this veteran trader, sells 2 million bushels of soybeans.
Right at that level.
Right at that level. And the price just tanks.
Yeah.
It just shows you, it just drives home the point that anything can happen. The market can be influenced by things we can't even begin to imagine.
Exactly. And that analyst was so attached to his analysis that he couldn't see what was actually happening right in front of him.
Yeah.
So are you saying we shouldn't bother with analysis at all?
No.
Should we just throw our hands up and be like, well, anything can happen?
No. Analysis is still important.
It's
just, we got to see it through the lens of uncertainty.
Okay.
We can't let it be this dogma. It can't blind us to what's really happening.
All right. So it's more about using analysis as a guide, but being prepared for the unexpected.
Exactly.
Yeah.
It's realizing we don't know everything. And there are always going to be things we just don't know,
Right.
Economic data, news, global trends, we can't possibly account for everything.
Yeah. Okay. That makes sense. But if we accept that anything can happen, how can we make any decisions if we truly believe the outcome is totally uncertain?
That's a great question. And that's what separates the successful traders from the rest.
Okay.
Embracing uncertainty, it's not giving up control. It's about understanding what we can control.
Okay. I like that. So if we can't predict the market, what do we have control over?
Ourselves. We can control our mindset, our risk management, and our trading plan. And if we focus on those things, we can actually navigate that uncertainty much better.
So we shift our focus from trying to know the future to managing our risk right now.
Precisely. And that's where this idea of predefining risk comes in.
Okay.
Douglas says this is one of the most important principles for traders. If you want to operate from that place of embracing uncertainty, predefining risk is key.
Okay, let's break that down. Predefining risk, what does that actually mean?
It means knowing exactly how much you're willing to lose on a trade.
Okay.
Before you even enter it.
Okay.
It's about setting what's called a stop-loss order, that automatically exits the trade if it moves against you.
Right.
Beyond a certain point.
Yeah. I mean, I can see how that's helpful, to limit those losses.
Yeah.
But a lot of people, a lot of traders really struggle with setting those stop-loss orders right.
Right.
Because it feels like, oh, I'm admitting defeat before you even start.
Yeah, and that's because they haven't fully embraced that idea of uncertainty.
Yeah.
They're still holding on to this hope that they can predict the market and avoid losses. But when you truly believe anything can happen, setting a stop loss, it doesn't feel like a restriction. It feels like freedom.
Oh, that's interesting. It's like acknowledging that you could be wrong.
Yeah.
Actually frees you from that fear of being wrong.
Exactly. And that freedom mentally lets you make better decisions,
Right.
More objective decisions, more disciplined decisions.
Okay.
You're not so emotionally attached to whether the trade works out because you've already accepted that it might not.
Okay. So it's like predefining risk. It's like creating this safety net and allows you to actually trade more confidently.
That's a great way to put it.
With less emotional baggage.
Yes. And this idea of predefining risk, it ties into those other common errors that Douglas talks about.
Okay, what are those?
Not cutting your losses.
Right.
And not taking profits systematically.
Yeah.
Those errors, they come from the same place. A lack of accepting uncertainty.
Right. Because we hold on, hoping things will turn around.
Yeah.
And then we don't want to take profits because we're afraid we're going to miss out.
And that fear and hope, it blinds us. It blinds us to what's actually happening.
Right.
But when we've already predefined our risk, we're not as likely to fall into those traps. We're more likely to cut losses and take profits because we've already made those decisions ahead of time.
Yeah, so it sounds like embracing uncertainty, it's not just some philosophical idea. It actually has really practical applications for how we manage our trades.
Absolutely. And it also has a big impact on our psychology overall. You know, how we think about risk, how we handle losses, how we just experience trading overall.
This has been so insightful. I mean, this whole idea of the uncertainty principle and how it connects to predefining risk.
Yeah.
But there's still so much to unpack here, right? This whole idea of the market's perspective.
Right. That's where things get really interesting. Douglas challenges us to shift our focus from our own individual perspective to the perspective of the market itself, to see it as its own thing with its own logic.
Okay, I'm intrigued. Let's dive into that in the next part of our deep dive.
All right, welcome back.
So we left off talking about how predefining risk helps us, deal with that uncertainty in the market.
Yeah.
And it's all about shifting that focus from trying to predict everything to managing what we can control.
Yeah.
Which I love. But now I'm really curious about this whole market's perspective idea.
It's a really powerful concept that Douglas brings up here.
Yeah.
He wants us to stop looking at the market as something we have to conquer.
Oh, interesting.
Or outsmart.
Okay.
For
more trying to understand how it works.
Exactly. Try to understand its own internal logic. Yeah.
Okay.
It's more like trying to understand how the ocean currents work.
Oh, okay.
Rather than trying to fight against them.
Okay. I like that. But how do we actually see things from the market's perspective?
It seems kind of abstract. It starts with accepting that the market isn't this one giant thing.
Okay.
It's actually made up of tons of individual traders, all with their own motivations, beliefs, biases, all that.
We touched on that a little bit before.
Yeah.
Even things that seem totally irrational can have this ripple effect.
Exactly.
About the whole market.
And when you start to see it that way, as this interplay of human psychology, you realize you really can't know for sure what's going to happen next.
It's like trying to predict which way a flock of birds is going to fly,
Oh, I like that.
You might see some patterns.
Yeah.
But you can't really know for sure what they're going to do.
Exactly. And just like with the birds, we got to learn to observe, without trying to impose our will.
So instead of saying, I think the market's going to go up.
Yeah.
It's more like, what's the market telling me right now?
Yes, exactly.
Okay.
It's about becoming a student of the market, observing the patterns,
Okay.
looking for those clues,
Yeah.
that can inform our decisions.
So less about forcing our analysis onto the market.
Yeah.
More about letting the market guide our analysis.
Exactly. We have to be more responsive, less predictive.
Okay.
And that requires a certain amount of humility.
Humility.
Yeah.
You mean admitting we don't know everything?
Exactly. We
Yeah.
have to be willing to be wrong, to change our minds when we get new information.
Right.
To accept that, things are always changing.
So embracing the market's perspective is almost like a spiritual practice.
Interesting.
Letting go of ego.
Yeah.
And becoming one with the flow.
There's definitely an element of that.
Yeah.
It's about surrendering to that uncertainty, learning to navigate it with grace and flexibility.
Okay.
And when we do that, something interesting happens. We start to tap into what Douglas calls the zone.
Ooh, okay.
That state of flow where
Wow.
our minds are in sync with the market and everything feels effortless.
We've talked about the zone before.
Yeah.
And I'm starting to see how it all connects.
Yeah.
Embracing uncertainty, adopting that market perspective, it actually frees us up
Yeah.
to operate at this higher level.
It's like learning to dance with the market
Okay.
instead of trying to wrestle it to the ground.
Oh, I like that.
When we're in sync with its rhythm,
Yeah.
we can move with it
Right.
and we can kind of anticipate those next steps.
This is really starting to click for me.
Good.
But I'm still wondering, how does this actually play out?
Yeah.
What does it look like to actually act
Right.
from that market perspective?
That's a great question because it's not just about thinking differently.
Yeah.
It's about acting differently.
Okay.
And one of the key ways that shows up is in how we manage risk. Remember those 3 common errors we talk about?
Yeah, not predefining risk, not cutting losses, and not taking profits systematically.
Exactly.
Yeah.
Those often come from our own, biases and fears.
Right.
But when we see things from the market's perspective, risk management takes on a whole new meaning.
Okay, I'm really interested to hear about this.
Yeah.
Like, how does embracing the market perspective actually change how we approach those 3 errors?
Well, let's start with predefining risk.
Okay.
When we see the market as this unpredictable force,
Right.
predefining our risk becomes essential.
It's not just a nice idea, it's a must.
Yeah, because we got to remember anything can happen.
Right.
And we need to protect ourselves from those big losses.
It's like a surfer wearing a leash.
I like that.
They know they can't control the ocean,
Right.
but they can control what happens if they fall off.
That's a great way to think about it.
And setting a stop loss, it's kind of like that. Like attaching that leash to the market's wave,
Right.
knowing we're going to be pulled back to safety.
Right. And this mindset shift also helps with, cutting those losses.
Because we're not looking at it as like a personal failure.
Right.
It's just the market doing its thing.
Exactly. We're not fighting the market. We're flowing with it.
Right.
And sometimes that means taking a small loss to avoid a big one.
And I imagine this perspective makes it easier to take profits too.
Absolutely, because we understand that even winning trades can turn into losers.
Oh, right.
If we hold on too long,
we're
not trying to get every single penny.
Right. We're happy with what the market gives us.
We're taking what the market gives us. Exactly.
This is powerful stuff.
It is, yeah.
It's amazing how embracing uncertainty and like taking on that market perspective can just change everything about how we trade.
It's a journey,
but
the rewards are worth it.
Totally.
When we align ourselves with the market's rhythm, we can tap into this flow and intuition that we didn't even know was possible.
This has been really great.
Yeah.
I mean, this whole idea of the market's perspective and how it relates to risk management and the zone.
Yeah.
But there's one thing we haven't touched on yet.
Oh, what's that?
All the psychology of embracing uncertainty.
Right.
Because it's one thing to like understand it.
Yeah.
But actually living it in our trading, that's a whole other thing.
You're right. That's where the rubber meets the road.
Exactly.
That's what we'll dive into in the final part of our deep dive.
Welcome back to our deep dive into the market's perspective.
Yeah.
We've been talking about some pretty big ideas here.
Right.
About uncertainty and risk management and really like seeing the market as this thing with its own logic.
Right. And now we're getting to like the real challenge.
Yeah.
The psychology of actually, using this mindset when we trade.
Right.
Because it's easy to talk about like cutting losses and predefining your risk, but actually doing it consistently, that's a whole other story.
That's where it gets hard.
That's where, our emotions get in the way, right?
Right, exactly. We get scared, greedy, hopeful, doubtful. All those things can really mess with our judgment.
Yeah, and that's why, Douglas talks about this mental discipline.
Okay.
It's like training our minds to act according to our plan.
Okay.
Even when we feel like doing something else.
It's like a mental toughness training.
Yeah.
Almost like an athlete, getting ready for a competition.
That's a great analogy. Just like an athlete pushes through pain to reach their goals.
Right.
We got to train ourselves
to
overcome those emotional impulses and stick to the plan.
But that's easier said than done.
Yeah.
Right? Like our emotions, they're powerful.
Yes.
And the market, it just seems like it's designed to trigger them.
Right. So how do we actually develop that mental discipline?
Yeah. How do we do that?
It starts with awareness.
Okay.
We got to be conscious of like our patterns, what triggers us. The ways our emotions kind of distort how we see the market.
So it's like mindfulness, but for traders.
Yeah, kind of.
Paying attention.
Paying attention to those thoughts and feelings.
Yeah.
Without judging them, just noticing them.
Yeah.
And as we get more aware of those patterns,
right,
we can start to, come up with strategies.
What kind of strategies?
To manage them.
It's like breathing exercises, positive self-talk.
Those things can help.
Okay.
But Douglas, he suggests something more fundamental.
What's that?
Changing our beliefs about the market.
Oh, okay.
Because, our emotions are usually triggered by what we expect to happen. If we expect the market to do something and it doesn't, we get upset.
We get frustrated.
Yeah. Disappointed, angry even.
Right. It's like when we get attached to a trade idea.
Yeah.
and it just doesn't work out.
Exactly. So the key is to loosen our grip on those expectations.
Yeah.
Accept that the market is unpredictable.
Right.
And that our analysis,
even if it's really good,
right,
it's still just a probability, not a guarantee.
So we're back to embracing uncertainty again.
Yeah.
It really is the foundation.
It's the key to mental freedom.
Yeah.
When we accept uncertainty,
Right.
we're not so easily thrown off
Right.
by the market's, twists and turns.
Yeah.
We can ride the waves without getting wiped out.
But doesn't that create a kind of detachment? Don't we have to be passionate about our trading to be successful?
That's a common misunderstanding.
Okay.
Passion's important,
Okay.
but it needs to be balanced
Okay.
with detachment.
What does that mean?
It means we're not emotionally invested
Right.
in the outcome of every trade.
So it's about finding that balance
Yeah.
between being engaged and detached.
Exact.
Passionate but objective.
Yes.
Yeah.
And that balance is what lets us get into the zone.
Yeah.
That flow state where things just click.
Right.
When we're in the zone, we're not thinking. We're just being...
present in the moment.
Right.
Responding to the market clearly and precisely.
That sounds kind of mystical.
It can be.
Yeah.
But it's not about magic.
Right.
It's about mastery,
Oh,
developing
yeah.
that mental discipline
Yeah.
and emotional resilience.
To really perform at our best.
Exactly.
This has been such an eye-opening deep dive into
Yeah.
all the psychology of trading.
For sure.
We've explored some really profound ideas about uncertainty and mental discipline
Yeah.
and aligning our beliefs with the reality of the market.
And I think the biggest takeaway here
Yeah.
is that trading success, it's not just about the strategy.
Right.
It's about your mindset.
Yeah.
It's about mastering the inner game.
Okay.
So you can play the outer game
Yeah.
with confidence.
I love that.
Yeah.
So for everyone listening, think about these ideas
Yeah.
and how you can apply them to your own trading.
Yeah.
What are your emotional triggers? How can you shift your beliefs so you can really embrace that uncertainty?
Right.
And how can you develop that mental discipline
Yeah.
so you can stick to your plan
Absolutely.
even when your emotions want to take over?
Those are the questions to ask yourself.
Yeah.
Because trading, it's not just about the money.
Right.
It's about self-mastery.
Yeah.
It's about becoming the best version of yourself in the market and out.
And that's a journey worth taking.
Absolutely.
No matter what the market throws at us.
Until next time, happy trading.